What if I told you that the key to making better trades isn't luck, but knowing what signs to look for? Every successful trader relies on tools called indicators to spot trends, confirm signals, and avoid costly mistakes. But which ones actually work? So I'm gonna go over the different categories of indicators and which indicators fall into each category, and only the important ones. There's thousands of indicators. I'm just gonna point out what I use for day trading, swing trading, that will help you move and take your trading to the second level. Also, we're gonna go over the common mistakes that actually traders do with indicators. Whether you're a brand new trader or you're still learning or you've been trading and struggling, this video will walk you through step by step. Let's dive in. Hey my friends, Zach here, and welcome to the world of investing. This channel specifically made for new traders, struggling traders, and here's how I'm gonna structure this video. I'm gonna go over all the categories and the indicators that fall under each category, and then we're gonna move to the charts and show you how am I gonna add those indicators, whether for day trading or swing trading. So let's start with category number 1, trend indicators. These indicators would tell you which way the market is going, up, down, or sideways. And mainly in those indicators, in this category, I use moving averages. There's the simple moving average and the exponential moving average. A moving average would take the price of the previous candles and it will divide them and even them as an average. So for example, if you use the 9 moving average, it will take the previous 9 candles prices and it will divide them by 9 and give you an average. I mainly use the 9 moving average and the 20 moving average, the 50 moving average, and the 100 moving average, and the 200 moving average. Some of them I use for day trading and some of them I use for swing trading. We'll get back to that once we get to the charts. But the difference between the simple moving averages and the exponential moving averages, they're pretty much the same. The simple moving average, actually, it's a smooth calculation. I use it for swing trading. And the exponential moving average, it gives more weight to the latest price and it reacts faster on the charts. And I use it for day trading. And exponential moving averages usually are used for short-term trends. That's why I only use it for day trading. Let's get to the second category. The second category is the momentum indicators. It actually measures the speed of the price movement. It's perfect for spotting when a trend is losing the steam or about to reverse. For those momentum indicators, I usually use RSI, which is the relative strength index, and it shows you briefly, it shows you the stocks that's overbought or oversold. And I also use the MACD. It's the moving average convergence divergence, which help in the momentum change of the stock, or it confirms the trend change. In a simplified way, it consists of 2 components. The MACD line, which is the difference between the two moving averages, and we'll get back to the numbers once we are on the charts. I usually set them to 12 and 26. Some people set them from 9 and 26. And there is the signal line, which is the 9 EMA, which is the 9 exponential moving average. When the signal line crosses the moving average, it gives a signal of a high momentum. And if it's crossing down, it gives a signal of the momentum slowing down. And there is the histogram in the MACD, which shows you the strength of that move. It's the difference between the moving average and the signal line. So the bigger the candles are in that histogram, the stronger it is. And the smaller the candles, the weaker it is. Don't worry, don't get overwhelmed. We'll get to that once we're on the charts. The third category is the volume category. Okay, the volume category, I use 2 actually. The volume, and I use the VWAP, which is the volume weighted average price. It's basically a volume indicator and the factor in the price. And I use it for day trading. I don't use it for swing trading. Some professional traders, they actually use the volume profile. I don't use it. I don't need it. But I'm just mentioning it because some professional traders use it. And then the fourth category is the volatility category. And it measures the volatility of the stock. For example, Bollinger Bands. Bollinger Bands, a lot of traders use them. I don't use it, but I'll put it out there just for, in case you've seen it on different videos, you know what it is. It's an indicator that measures the volatility of the stock. The fifth category, which is the support and resistance. Now, a lot of people use indicators like pivot points or Fibonacci retracement levels. I use my own support and resistance drawings, and if you haven't seen that episode yet or that video, please go back to the crash course, or I'll leave a link in the description. Go watch it. It's the base of the trading strategy that I use, and I rely on it a lot. On every single trade, I rely on it. It's a very important video. Go watch it. It's very important. But I do use Fibonacci retracement levels in my day trading. I only use it for extra confirmation. I don't rely on it. It does help me pinpoint the pullback levels of the 23.6% and the 38.2% and the 50%. I use only those three levels, but I'll explain it once we're on the charts. And there are like the market sentiment indicators like market breadth and the rest of those, but I really don't use them. And there's more categories, there's more indicators. I am only going through what I use. So that's all the categories that I'm gonna mention. I don't want to overwhelm you. I just want to keep it simple and only use what we use for trading and swing trading. So let's go to the charts, guys, and let's add them up to our day trading chart setup and our swing trading charts setup. And we'll break them down. We'll see how which ones I use for this and which ones I use for this. So here is the chart. I'm gonna make this side to the left a swing trading chart, and the one to the right a day trading chart. And this video is just to show you how to plot all the indicators on your charts, how to set up your charts and how they look for day trading and swing trading. I will do that in a separate video, but for this one, just let's stick to that. So I'm gonna make this a 3-minute chart. All right, and this one is a daily chart. That's the swing, that's the day. Okay, the light gray here is aftermarket data. So let's start with the trend indicators. Okay, I'm gonna start adding moving averages. So what I'm gonna add here, I'm just gonna add to the chart indicator. So I right click, add to the chart indicator. Okay, and I'm just gonna type in here moving average. Okay, we have exponential and simple. You can see here, I'm gonna choose simple for the swing trading. It puts it up here and automatically it sets it to 50. Okay, so what I'm gonna do here, I'm gonna edit and I'm just gonna make it 9. That's my 9-day moving average. It's day because it's on a daily chart. So it's my 9 moving average. And I usually keep it in yellow. I'm just gonna add a new one. So add an indicator. And I'm just gonna put moving average. And I'm just gonna add a simple. Okay. And this one, the second one, I'm just gonna change the color to, I'm just gonna edit. I'm gonna make it a 20 moving average. And I'm just gonna change the color to blue. There we go. And I'm just gonna add a new indicator here. Moving average. Simple. And I'm gonna keep that a 50-day moving average. I'm just gonna change the color to red. Add another indicator. Put moving average. Simple. I'm just gonna change this. Edit. To 100 moving average. I'm just gonna change this. I make it green. Okay, I memorize those. All my charts that I actually have my indicators on are actually yellow, blue, red, green, and the last one is the 200 moving average, and I make it purple. So that's a simple moving average. Edit. I'll change the value to 200, period. And I'll make it purple. All right. Okay. Now, I always use those moving averages just to see. You can see the market is going up. It shows you the trend of the market. But I also use them. Sometimes they line up with some support and resistance areas. And it's just an extra confirmation. That's all it is. I don't depend on them. Okay, that's all for moving averages I use for swing trading. But for day trading, let's add an indicator. Moving average, I use the exponential. Okay, and that's an exponential, and I will edit this to 9 period moving average. Here we go. And I will add another one. Exponential, and I will change that to 20. And the 20, we said it's a blue. There we go. That's it. That's for moving averages on the day chart, the intraday chart, sorry. All right. Now, the second category indicators is the momentum indicators, okay? The momentum indicators, we have the MACD and the RSI. So let's add indicator and just put RSI. That's the RSI indicator. It's a fundamental indicator here, okay? And what I will do here, I will push it down. I usually take this out. Okay, I just remove this and I keep this. Now, what I do with this one, the RSI 14, I edit and I leave it white like this. All right, and that's my RSI. Now, usually if it's above 70, it's considered over bought, and then if it's below 30, it's considered oversold. I don't really look at it much in that way, but I'll tell you probably later what I do with this. But here we go. We're gonna just add the indicator MACD. Okay, so that's the MACD indicator here. Go like this, edit. And here, what we're gonna do, the line here, the line style, the color, I'm just gonna make it light blue. And that's the MACD 12 and 26 average. So it averages the 12 and 26 moving averages. And for the 9, I will make it red. All right. And what I do here, usually, I just add a plot. So add to, I'll go like this, and then add plot here. And what I do is I go MACD, and I add the histogram here. Okay, and scale with MACD, and then here you go. And what I do with this one, I also edit this one, and I edit the colors. I'll make this green and navigate value color. So if it's down, it's red, and if it's above the line, it's actually green. And that's my MACD. All right. Do I add any of those on the daily chart? I do not. I do not personally, I don't use them. Okay. Now we're going to add the volume. Okay. So the volume indicators, just put here, we go just volume. And that's the volume indicator. Okay. Usually what I do, I like to keep that because that's my first, it's my first go-to kind of indicator. Let me just edit this for now. Usually when you add a volume, it adds a moving average with it. It shows you if the volume is slowing down or going up, but I honestly don't use it, so I just remove it. This candle is red, the volume is red. This candle is red, the volume is red. All right. So what I do usually, I move it up. I drag this, I move it up. Okay. There we go. And I keep it below, right below this one. Now what I do on the day trading chart, I also add the volume. That's the most important indicator for me. All right, here we go. You just keep it simple. We don't mess it up. I remove this. And I'll keep it that way. All right, and now some people use the Bollinger Bands. Some people use the volume profile. I don't use any of those. Okay, for the volatility, people use Bollinger Bands, and I don't use it. And then we have the support and resistance. And as I said, we go to the charts and we draw our support and resistance. When I go to drawings, I just add show drawings toolbox, and I'll show drawings toolbox all the time. Okay. And what I usually do, guys, after you do it, all you have to do it is once. Once you do it, you can save that chart, and you can save it and it loads all the time. All right. You see how to me, it still looks simple. It's not over messy. Those moving averages, you see the 9 and the 20 moving average. Sometimes I want to see if the stock is respecting the 9 moving average. And sometimes you use it as an extra support to your chart, to your support or resistance. All right. That's all. It's not that it's a grained in stones for me or anything. No. What's most important is actually the volume. For me, is the volume. I'll tell you the MACD, how you measure the MACD and RSI. I use them for divergence, convergence. Okay, sometimes they are momentum. I'm like, I don't have an example right now, but sometimes you can draw a line right here. You see how it's going up. Sometimes the actual stock is actually going down. Okay, what it means is it's still going down, but it's gaining momentum bit by bit, and that shows you that it might actually shoot up, or it might lose a lot of steam. I'll make a special episode on these kind of things. Same thing, I use it for RSI. It just tells me if it's overbought, oversold, and sometimes I use these kind of Like for now, this is going down, okay, but yet this is going up on the same in the same area. It's actually going up, okay, but it looks like it's losing steam, so it might pull back, or momentum. It's losing momentum. On the daily, what I use when it comes to volume is the VWAP, and I will add VWAP. So I add indicator VWAP. Okay, that's the VWAP indicator. I always go and edit this. First of all, the line style, I make it dashed, and the color, I make it white. Okay, and that's about it. Okay, I use it a lot in my trading, in my day trading. So let me just expand this. Okay, that's how my day trading chart looks like. I only look at those two if they're going to act as support or resistance. Okay, and sometimes even the 20 I don't use it. I just want to see if they cross each other. If the 9 is crossing below the 20, it means it's losing steam. And if the 9 is crossing above the 20, it means it's gaining steam. Okay, that's all. It's gaining momentum, some momentum. I don't have it written in stones, and it's not a big deal for me. Okay, but it just gives me an idea. And sometimes the stock actually respects one of those. Okay, like in this one, you see, it's just following through here, right? In here, look, the 20, it's acting as resistance over here, over here, over here. Sometimes, you know, it just gives you an idea. So in my daily chart, I use the Fibonacci retracement level. Okay, what I'm gonna do here, I'm just gonna show you. Okay, I'm just gonna show you how sometimes I use it. Okay, let me go like this. Okay. So let's say I want to see if I find a trade here. I have the high of the day as a support, for example, and it pushes through this. So what I do is I go and grab the Fibonacci retracement level. So how do you draw it? It's from the lowest of the previous close. Okay, especially if it's gapping up. You go from the close and then you draw it all the way to the highest. You see over here, okay, the 23.6, that number right here, if you see the 23.6, it matches and it lines up with the high of the day, the initial high of the day over here. So it broke it through, okay, and then and it made a new high. And when I drew the Fibonacci retracement level, I was just seeing if it's giving me an extra support. So where did it go? It went back to the area. I'm just gonna draw this. This is a small initial high, and that's considered after it broke, it will be considered as a support. Okay, look at this support. It found it right here. Okay, and on top of that, it broke through and it made a new high over here. So when you draw the Fibonacci retracement level, this 23.6 lines up exactly on this level. Okay, along with the VWAP. That's why I said I'm going to make a different episode on setups for day trading. It absolutely has nothing to do with head and shoulders and other stuff like that. Okay, but I'll make different episodes on them and different videos. But what I'm trying to show you, the Fibonacci retracement, sometimes it gives me an extra confirmation. It's not, sometimes it doesn't, and I just ignore it. Okay, but it's extra confirmation. It meets up with it lines up with the initial high, morning high. It lines up with the VWAP. Okay, and that's 3 indicators pretty much in the same area. You see how sometimes they line up, and you draw it if the stock is gapping down, You draw it differently. You draw it from top to bottom. So if the stock is actually, for example, like this one, it's gapping down, okay? What you do, you just grab this and you go from the close of this day and you go all the way down to the initial morning low. And that's your 23.6, and that's your 38.2, and that's your 50. I only use those three lines, guys. I don't depend on anything else. Okay, but look how it actually matched up over here with the 38.2. It just gives me an idea of how far it's gonna give me a pullback. Okay, that's when I'm shorting the market here. All right, and when it doesn't gap or does anything, let me see an example here. For example, this one. So it did not gap up, it did not gap down. Okay, for example, this one, you want to go long, you just grab, let me just zoom it into that day so it looks clearer. There we go. Okay, so you go like this, you go from the low of the day, and you go like this. For example, you want to see how far it can pull back. Does it match with other indicators? This line, for example, for here, it doesn't look like it did respect the 38.2. Okay, the second line here, once, twice. So sometimes it does respect it, and then when it pulled back, it respected the 23.6. Okay, but in that case, you actually have to pull it all the way back to the new highs. And it actually respected the 38.2 again. Sorry, I was mistaken. You see how these things go? That's how I use my Fibonacci, and I don't leave it all the way. I just see it, okay, now it's respecting it, it's bouncing off of it. If I enter the trade, that's it. I enter the trade and I just remove it. I don't need it. I just keep that clean like this. And if you find this messy, you can even remove this 20-day moving average. I don't use it much. I just use it just to see the momentum if they're crossing each other. That's all. Okay, so that's how it looks like. That's my daily chart. Okay, I know my swing day chart. Let me go like this. This is my swing chart. I know it looks a little bit more messy. Okay, but you have plenty of time to look at it and analyze it. Okay, that's all I do. I ignore these for now. Okay, I look at the chart on the top here. I set my support, my resistance, my areas. Okay, my main areas. I scroll down close, and I go closer like this, and look at it. For me, it's just okay. This is good. This is good. Check mark, check mark, check mark. Okay, and that's how it goes. I hope I just explained it. I'm not gonna make it too long of a video, but I hope it did explain the thing here. There's no other indicators that I use, and if I did later on, I might tell you guys, but as for now, I don't remember anything that I went through that I use, and I didn't put it on the charts. So after you've seen me plotting them on my charts, here's the trick. No single indicator is enough on its own. The real magic happens when you combine them, and they all align together to give you a higher probability for the stock to go in your direction or to go in your favor. And remember, probability. It's a probability. Nothing is engraved in stones, guys. And that is why we have risk management, where we will have a lot of future videos about risk management. So make sure you subscribe to this channel if you really want to learn the proper way of trading. So common mistakes that traders do. The first mistake, they overload their charts with indicators. It drives them crazy. They can't read the price action anymore. Something like this. Mistake number 2. As soon as they see a price action lining up with one of their indicators, they press the buy button and they just jump onto the trade. And they think it's an immediate buy signal. Guys, I fell into that problem before, and it did cost me a lot. So don't worry. That's a mistake people do. We will rectify it here after going through all the crash course and probably some risk management. We will get one day putting together a trade from A to Z, which it involves everything that we've learned. Mistake number 3, some traders, they believe in indicators as if it's everything, and they make those indicators dictate their trading. No, indicators are just confirmation signals. Remember that. And now that we've gone through this video indicators, we've gone before about chart patterns, before that about price actions, support and resistance. All of this is lagging indicators. They are information that you've got that happened previously. Nothing shows you that what's happening right now or what's about to happen or might happen except one important tool, which is called level 2. You guys click here to watch that video. If it's not there, it's coming up soon. I'm preparing it. It should be up soon, and it is a very important video. And if you haven't watched my crash course from the beginning, click over here and start here. It'll get you somewhere. Have a nice day. We'll see you in the next video.